All right, let's get back to the job market and the housing market for that matter. Weekly jobless claims falling more than expected for the first week of 2019. We had initial claims for unemployment benefits falling to 216,000. The labor market remains strong and continues to show signs of growth. Joining us now once again is Bill Darcy, National Kitchen and Bath Association CEO. So obviously you've been watching the housing market, the jobs market as well, because when you talk to your members, these various kitchen and bath companies, what are you hearing in terms of their ability to fill positions?
Very challenging. It's across the board. So we represent manufacturers, retail, designers, across the board. So, we have a diverse opinion at times.
So then we're talking about also a mix of skilled and lower skilled work, or higher skilled and lower skilled workers?
Correct. We say professional trades versus skilled trades.
Mm-hmm.
Professional trades, like 48% are saying that they're having challenges hiring, 75% on the skilled. So these are big challenges for us right now.
And one thing that sort of backs that up, Bill, is that I've been noticing watching sporting events, sports on TV, one of the biggest advertisers, job recruiting companies. If you're the pitch is, if you're having trouble hiring workers, our company can help you. So what does that tell you about the job
market? There's white space in that. So
right?
2 million jobs opening up now through 2029. So there's a ton of work now, and this we project to continue. So the gap will widen. We're trying to be creative about what we can do to help drive interest. A lot of people left the construction industry during the Great Recession. You have the challenge with young people, the lack of young people, their interest around that. And for every 5 people leaving the industry for retirement or just leaving the market, only 1 is entering. So,
can you say wage inflation?
So what are you doing to get creative?
Are there training programs?
Yeah.
Training programs. I'm part of a skilled labor fund in partnership with the National Housing Endowment, National Home Builders Association, and Remodeling to jointly try to collaborate amongst our industry's associations to drive interest. We have a trade show coming up in 6 weeks in Las Vegas, the Kitchen and Bath Industry Show, and we're hosting 150 Las Vegas high school students on site to show them the potential of what a career in this industry could bring.
It's part of that showing them the potential is, that plumbers can make a lot of money. People who can actually put tile up and understand how to do it well can make quite a bit of money. That a 4-year college degree may not pay quite what that would pay.
Right. There's a lot of opportunities for, what we try to do is introduce from middle school, high school, pre-high school, middle school, the interest in what this industry is, because sometimes, college isn't for everyone. I have 3 children, and we all want our children to be most successful they can be, but I'm going to think much differently with my 11-year-old in the years to come about plumbing, electrical, even if you tie it to a business associate's degree. I think you could dominate a market if you really had a strong skill set in plumbing and electrical installation. These are the core trades, carpentry, that, as you say, that wage growth.
Yeah, I was going to say, but are you going to have to pay them more?
Right
What's
now you do.
Like?
For us, we deal more with the finished carpenters versus framing carpenters, where, certainly it's an issue in a home construction, but on the remodeling of the kitchen and bath side, it's more on the finished side. We've seen that wage growth over the last few years.
So let's talk about the housing side of the equation then. As you said a little bit earlier, you have not seen a slowdown on that front yet. We've seen some of the housing numbers get a little more choppy. I'm curious how the timing works with you all. In other words, are your constituents sort of a leading indicator of what happens in the housing market, or is it the other way around?
Well, that's a great question. I think we're usually last out, first in, or vice versa, depending on the way you look at it. So typically when the housing slows down, you have outdated stock in the U.S., you have a lot of repair and maintenance needed, limited supply. That's good for us as far as our members who are working in the remodeling space. And where are you going to work and invest that money? The kitchen and the bath. So our remodelers typically still have work following any slowdown in construction. And typically first back in is you're not going to maybe build the house right out of the box. You're going to start maybe in consumer sentiment, freeing up those funds and investing in the kitchen and the bath. So we really, our members, were very resilient through the Great Recession, actually, and it was indicated by the membership and how they supported the association. So we feel much more prepared, even if there is a slowdown. Our members are cautiously optimistic.
Do you keep, I'm curious, an index perhaps of the business trends among the members that you make public so that those of us who are always trying to guess the slowdown, the recession that's coming or that we're in, would help indicate that?
We are launching a new kitchen and bath market index at our show in a few weeks, so we will certainly keep you abreast of that. We absolutely will. This is something that we feel we can be closer to the pulse. You know, you joke around what's happening with the market volatility. You know, is the last year relevant, or is the last 30 days what you want to know? So I think based on remodeling and consumer spending, we could be really close to that pulse to track that forward.
How many members do you all have?
We have 14,000 company members representing about 50,000 total individual members.
And so that index will measure the projects, the number of projects they're working on, for example?
Correct, across the board, really. So, you know, we have 800 manufacturer members. All the brands that you would name off the top of your head are members of the association and exhibitors. Interesting thing, too, is we're sold out in exhibit space for our upcoming show. We will leave our show selling for 2020, and we'll have a pretty good indication of the sentiment, if you would, on the manufacturing community, how they feel about the year ahead if they pre-commit to 2020.
All these indicators, right?
Yeah.
We have a lot of indicators.
We have someone else with us now who watches a lot of indicators, and that's the chief economist at Indeed, Jed Kolko, here along with Bill Darcy. Jed, I think we've got you now. So, Jed, we've been talking about some of the numbers for the housing market, but also for the labor market, which I know you watch closely. So what are you seeing across the landscape in terms of what Bill was just calling sort of professional skills versus skilled labor in terms of where the most demand is right now?
Right now, we're in the midst of a very strong labor market. It's been strong certainly this past month that we got from the government report. And for the past few years. What's really unusual, though, about the current labor market boom that we're in is the biggest growth in jobs has been among jobs that produce physical stuff, mining, manufacturing, construction, the kinds of jobs that have been declining in the U.S. For many years, that were hurt very badly in the housing bubble, and that many people thought would never come back. These are also jobs that are not projected to grow longer term. So the boom that we're in is actually an unusual moment where we're seeing growth and demand for the kinds of jobs that may not be driving the economic growth a few years from now.
Would it be maybe perhaps time to split out some of these job numbers? For instance, those people, as we were just talking with Bill, who might be related to housing, you can see that there might be growth or at least a future there, whereas with mining, a lot of the job growth in mining has been support activity. It's not as if we've been hiring more people to go into coal mines, or am I wrong?
Overall, the growth in the mining sector has been quite strong over the past couple of years after that recovery in oil prices a couple of years back. But longer term, both mining and certainly manufacturing are expected to be a smaller and smaller share of the U.S. economy. I mean, the places where we should expect to look for longer term job growth tend to be in healthcare, some kinds of technical jobs, as well as professional services. And personal services, things that are harder to automate and harder to do from other countries.
All right, AI proof, perhaps. Thank you so much, Jed Kolko, joining us there via Skype, and Bill Darcy here with us in the studio. Appreciate it.
Thank you both.